All right, guys, R2F here. I'm going to be doing a analysis on the US dollar index, otherwise known as the DXY. If you don't know what that is, it's basically a basket of currencies with the euro being the strongest, most impactful currency in the US dollar index basket. And then we have the pound, Japanese yen, Swiss franc, and the Swedish kroner. So there's a few currencies in there, and analyzing the dollar index can also give you some insight into where other currencies may be going, or you can use it as a confluence to back up your bias for other currencies. Okay, I analyze this and mostly on the higher time frames. I think minimum at least 4 hour, but generally I'm looking at it on the 12 hour, the daily, the weekly, 2 week, 3 week. You know me, I go from the monthly, 2, 3, 4, 5, all the way to the 12 month, which is the maximum, which is the 1 year chart. The yearly chart, if I could, I'd go to the 2 year chart, but it's not too important. Okay, so let's have a look, and I'll be using ICT's concepts with a touch of my own, basically on how I use his concepts to read price. Okay, so why I start on the higher time frame? Because all my trades are framed on based on the higher time frame, and it's all based on what is the next candle going to do, and then I'm going down to a lower time frame to get an entry. Okay, so without further ado, let's have a look at this chart. So I'll start on the yearly. Okay, so basically we came into this premium array, this premium SIBI on the yearly, then we came back, retraced back down into a yearly BISI that was created. Okay, so if there's a BISI created on the way to a SIBI, then that can be an indication of higher prices after the retracement, right? So basically, we came into here a couple of times, and then we expanded up. Okay, took out the liquidity, created a yearly BISI with a gap, one of my signature gaps, but it did not get used yet, or maybe at all, depending on how this yearly closes in 6 days. So most likely we are going to see higher prices. If we do happen to see price return into this yearly gap, I'd most likely be going all in um, positions here, trying to target the top, target this high and that high, right? Because I'm looking at the bodies. If we create the body like this, that's a bullish order block based on candles. Okay, and okay, my computer's lagging quite a bit. Let me pause it 1 second. Okay, yeah, this need to get a new laptop. This old guy is about to kick the bucket soon. So let me highlight this order block here. Yeah, something's happening to my computer. It is lagging like crazy. Okay, that should be okay. So that's an order block over there. And if we next year opens and we do happen to trade all the way down here, that would be a liquidity run, and I expect a fast rejection up. But probably not. If not, we took out this yearly high quite recently and removed this, but we still have this yearly low. We may just see a retracement, maybe somewhere in here, and then moving higher. Okay, depending on the lower time frame. So I'm not going to go too many time frames. I'll just start on the 4 month. Okay, the yearly gap, yearly order block. We also have this 4 month order block here. Price, like I said on the yearly, we expanded up, right? We had a retracement, took out the low, took out low one more time, and then a big rejection up. So to me, that's, although there's liquidity down here at the moment, it's quite possible we just continue up in the meantime. So let me go down to the monthly chart. to have a better idea. Okay, so we'll trace more into a premium. Premium is anything above equilibrium. So we came to equilibrium, consolidated down here, and we're expanding up. It may be quite possible we come back down there. So let me go to the 3 weeks, 2 weeks. Okay, we almost reached this target. I had this target for a long time. Okay, so this is one of my favorite type PD arrays, order block, accompanied with a gap. That's most of the time it's higher prices. So we came into the structural PD array, this structural CB over here, and I anticipate us coming a little bit more into there was a new week opening gap on the weekly. All right, so you see we broke above this trend line, found support on it. I'm not using those type of concepts, but I do use these retail concepts in alignment with where price wants to go, right? So price is moving for two reasons. First reason is for liquidity. It's either engineering liquidity, inducing liquidity, or it is rating that liquidity. And the second point is price is always being efficient and offering fair value, right? For example, if price expands quickly from an area, you normally get a retracement into fair value. Why is it not coming back deeper into this? Yeah, it doesn't have to, because look how many times price has chopped around this area. Fair value has been offered many times inside this range. So we break out that range, we find support here, and then we move up. That is when conventional support and resistance concepts work, right? If you look at a chart where price has found support at certain levels, it's because price has offered fair value and price wants to get somewhere and trap the traders down here who were stuck, right? Who were still trying to get into a short, trying to get into a low, take out this low, that low. Traders are FOMOing in, and then we expand and get up. Traders are not allowed to get out of their position very much. Here we see price drop a bit. Traders, bears feeling hopeful, and we continue to expand. Okay, and we get a nice gap in between here as well. So where could price go? Let's see, where could price go on a lower time frame? 2 day, 1 day. Okay. All right, so of interest to me now is this 2 day here as a possible POI to potentially hit higher, right? So if we come into this level, just let me see if that's even equilibrium. Not yet. We may dig deeper, but the bodies are what are important. The bodies of the candles is what is important. Okay, so quite possibly we come down here. If we come down here into this busy 2 day, I'd be interested in taking a trade, right? Daily, we came into this daily gap, but there's an order block here. We may push higher by all means. Okay, yeah. So I go down to the lower time frame, not to look for trades, but to refine an entry if there was a trade on the higher time frame. So 2 day here, if we do come into there, that's a great target for me. I'd love to target at least this high. But I see some things on the lower time frames. For example, this kind of structure where we just crawl up and then boom, we meander around, and then we're going to possibly come back down. Okay, one scenario that's very common in these types of structures, if we're bullish, is to come below this low a little bit. Who knows, maybe even here, just below this low, and then big rejection back up to the upside, which would align with this 2 day busy that I'm interested in. This one scenario. Okay, we do start to break down. There'll be a great target down here. I anticipate us probably coming down into here, taking out the low, taking out the move that initiate the move that initiated this big move. Okay, I don't know what I'm saying, but basically here's where the move started, right? So everybody's trailing their, not everybody, but a lot of people are trailing their stops below this low. So that's liquidity, right? So for this big corporate institutions, big players in the market, they play to win, and they require liquidity to play the game, right? So they need this liquidity. The market makers need to engineer this liquidity um, for them, right? Because market makers, they get commission as well. Okay, they're doing their job, they get commission as well um, from investors that want to buy at certain prices. Okay, so liquidity down there, and possibly to move price higher. If not, if we break lower and then we create a higher time frame CB, then I see us possibly hitting more to the downside again, right? But the structure, yeah, that looks like it wants to be taken. I definitely see that I definitely see that being taken relatively soon. Okay, so yeah, that's it. That's it for this analysis. And how can you use this for your advantage? If you're trading the euros, for example, the chart would probably be upside down like this. You can look for shorts, right? I'm in a New Zealand dollar short because there's liquidity in the form of equal lows below. So this aligns with my possible dollar index analysis, and the dollar index analysis aligns with my analysis on these other currencies. So yeah, if you're not using the dollar index for your analysis, then you're missing out. Unless you have a completely mechanical strategy on a very low time frame, then then okay. All right, so that's it for this video. Merry Christmas, Happy New Year's. I hope you take a break, spend time with your family and your friends. The charts aren't that great at the moment. Okay, they're not going to move very much because nobody's participating. Most people are off, and so what's the point? What's the point, right? Even the big players do not want to come to a market where nobody's selling anything, nobody's buying. There's nobody there. Okay, there's no one. So compared to uh, normal times of the year, right, where people are trading actively. Okay, so go out, have fun, get some rest, come back again during the second week of January, and the conditions should be a lot better. All right, R2F signing out.